Hey everyone, and welcome to my channel. Today we are diving into the hottest IPO of the week, Credo Brand Marketing IPO, the company behind the iconic men's fashion brand Mufti. This IPO has been generating a lot of buzz, and for good reason also. Mufti is a well-known brand in the Indian men's fashion wear, and Credo Brands boost impressive financials. So let's get started and check if it is worth investing, or it is just like any other IPOs coming to the stock market to benefit from the recent IPO boom. So let's dive in. So now let's see about the company first. The company is into the casual men's wear. They make t-shirts, trousers, jeans. The company was started by Mr. Kala Khuslani. It was launched in 1998 to cater for casual wear demand. Early mover advantage. They have that early mover advantage. Earlier they were making only shirts and other apparels, but when in 1998 many movies they started promoting the fashion of jeans and casual wear, they tapped early into the market, and so they have the early mover advantage. By the name, it seems like it is a foreign company, but Mufti, actually the name is used for the casual wear worn by the defense personnel. So it is an Indian company, but it looks like a foreign company, so that also gives an advantage to the company. This company is having good positioning among competitors. So competitors, they don't have this advantage. The company is having an advantage of having a look of a foreign company, though they are an Indian company. They work on a very different business model. They follow Apple model. What is Apple model? Apple model is that they design and then they outsource the manufacturing, but they have very strict quality control measures in place so that there is no compromise on the policy. This brings the cost down, and the company can focus more and more on design and product development and other things. So they are also following just-in-time manufacturing. So just-in-time manufacturing, in this manufacturing, it is mostly used by the Japanese companies, especially Hyundai and other companies, where they will not manufacture the items and keep them in the warehouses. They will only manufacture when a demand is there. So that also brings the cost down for the company and makes them more competitive. Now we see the IPO details. The IPO is open for subscription from December 19th, and it is closing on December 21st. The price band for the issue has been fixed at 266 to 280 a share. So if you are going to apply, you should always choose the upper price band, because there has been a lot of demand and this IPO is going to be subscribed multiple times. So please don't even think about applying lower than the upper price band, that is 280. The IPO is an offer for sale of 1.96 crore shares by existing shareholders, including promoters Mr. Kamal Khuslani and Poonam Khuslani. Further, non-promoters including Concept Communications, Vela Properties, Jay Milan Mehta and Sagar Milan will also be offloading their shares in the OFS. But as there is no fresh issue component by the company, all the IPO funds, excluding offer expenses, will go to the selling shareholders. So it is a completely offer for sales. The money is not going to be used by the company in any kind of expansion or any additional facility. What are the objectives of the issue? Given that the issue is a purely offer for sale, its proceeds will go to the selling shareholders, with the company not getting any money through IPO, as I told you. So lot size. Investors can bid for a minimum amount of 53 equity shares and in multiples of 53 after that. So the minimum amount of the investment required by the retail investors is rupees 14,098. At the upper price band, the bidding amount will increase to 14,840. So you just take it for granted that you will be applying for at least rupees 14,840. And if you want to apply, please apply for one lot only. If you have more money, you can apply through multiple demat accounts, so that the chances of an allotment are higher. Applying for more number of lots through a single demat account does not make any difference. So please keep that in mind. Now let's see about the company first. So as I told you, it was incorporated in 1999. Credo Brands Marketing Limited offers casual clothing for men with its flagship brand Mufti. In 1998, the company's product range consisted only of t-shirts, shirts, and trousers. Today, however, the company offers a wide range of products including sweatshirts, jeans, cargo, chinos, jackets, blazer, and sweaters. So they have all the items in their brand to cater to the young and growing market of casual brands and casual clothing in India. The company currently operates 773 retail outlets across India as of May 31st, 2023. These include 379 exclusive brand stores, 89 large format stores, and 1,305 multi-brand stores. So, till now, the 50% of the revenue is coming from exclusive outlets only. But now, the company is focusing on online sales also, and currently 13% of the revenues are coming from online sales, and it's growing. So that is a good thing. Now, financials. In the year ended March 2023, Mufti recorded a healthy growth in financials, with net profit growing by 111% year-on-year to 77.5 crore, and revenue from operations rising 46% to 498.2 crore. However, for April to June quarter of the current financial year, its net profit was rupees 8.57 crore on revenue of 118.5 crore. So if we see last 2 years CAGR, revenue growth is 42% and profit growth is whooping 374%. So that's very good and very impressive financials. But this current quarter, the June quarter of this financial year has not been very good. The profit margin has also been affected, and the growth is also very dismal. But we have to see how the company performs in the coming quarters. Because the first quarter is normally a lean period for the company. The margin is highest among all their peer companies. Average revenue per exclusive business outlet is increasing year on year. Growth is better than competitors, so that is also a plus point. P ratio is also among cheapest. So the financials looks all rosy. We'll see what are the negative points also later in the video. Lead managers, we can see some very good names like DM Capital Advisors, ICICI Securities, and Keynote Financial Services as lead managers for the issue. LinkedIn Time India is the registrar of the offer. So LinkedIn Time, they are mostly in the recent IPOs. They were the one managing the issue, and at one point SEBI has to so they're concerned because they were managing all 4 major IPOs getting listed on the same day. So that was affecting the IPO listing also. So SEBI raised concerns on only one lead registrar working for all the IPOs simultaneously. LinkedIn Time was the registrar for that time. Now, what are the risks? So if we are going to put our money in something, we have to evaluate the risk, and the risk management is the most important thing. So the first is, while the company designs its products in-house, it outsources the manufacturing of the final product. So any inability to obtain sufficient quantities of apparel of the requisite quality promptly and at acceptable prices, or a slowdown, shutdown, or disruption in such third-party manufacturing partners' operations and performance would adversely affect the business cash flows, result of operations and financial condition. In my opinion, this is not a very big threat. It can act as a temporary threat to the company, but since this is not a very capital incentive industry, the brand owners, they can move to other manufacturers quickly, and it can be dealt in a quarter or two. Let's see the second risk. In the highly competitive industry, Mufti faces pricing pressure from rivals, impacting its capacity to sustain or raise product prices. Subsequently, this may have adverse effect on revenues from product sales, gross margin, or overall profitability, posing potential risk to the company cash flow, the result of operations and financial condition. This is an ongoing and average risk. Every company is having this risk. Let's see the third one. One of the company's non-executive director is the director on the board of directors of Arvind Fashions Limited also. It is a company engaged in the same line of business as Mufti. So this can, we have to dive further into it. We'll see, because executive director, non-executive director, common director having with the same business line, its competitor, it can prove risky sometimes. But what is baffling me the most is why, if everything is so rosy, why the promoter is selling a stake, why they are not putting money in press capacity expansion or additional facilities. And there has been no reason given by the company in the draft hearing prospectus DHP. So that is the major thing baffling me. Anyways, we can ride on the tide, and we can apply for the IPO. In my opinion, the listing date, Mufti Menswear IPO will be listed on BSE and NSE on a tentative listing date. This date is not final, but it may be getting listed on Wednesday, December 27. So let's see. The grey market premiums are very healthy, and there was a slight dip, but currently it is trading at a grey market premium of 40%. So that also shows a very good listing gain expected out of this issue. So for me, I will be applying for this IPO. Please drop in the comments what you are going to do, and any updates for the IPO I will be sharing with you the time and time again. So stay tuned to my channel, and also please like this video, subscribe to my channel, and share this video with more of your friends who want to invest in this IPO, so that they can get a full-fledged and inside-out analysis of this video. So thank you for watching this video completely, and I'll be back with more such insightful videos soon. Thank you so much.